Bitcoin is always going to be the exit strategy that I encourage people to understand. It's always going to be the monetary measuring stick that you need to use to work out, are you beating the debasement of your currency at 12% for the US dollar, which is the strongest currency on earth, and the 3% inflation rate that generally happens across major economic zones, and even worse for third world countries and weaker economic zones. Now, when you think about Bitcoin, it goes on these extremely exponential moves, which is when the money supply increases, financial conditions ease, it allows this very scarce asset to be met by a high demand of people taking risks. When this happens, you've got a choice. Are you going to hold and endure the pullbacks? Are you a long-term investor where you understand the fundamentals of this asset and you're going to let this run into the back end of this decade where it will go into a very high, potentially 7-digit amount? Or are you an investor who has specific timeframes where you're going to have a portion which you want to keep and hold, and then you've got a portion that you need for liquidity, that you need for lifestyle chips, that you're going to attribute to a time frame? So it's important to understand the different time frames and the way that Bitcoin moves, the way that this cycle could play out, and understand the full picture of what could happen and have an exit strategy prepared based on some of the insights I'm about to share in this video. I hope that I can give you an idea of what your path could be, whether you're just going to hold and understand and build more depth with understanding this asset, or are you going to have a position that you want to let go of, a position that you want to free up so that you can have those lifestyle chips, those holidays, have that liquidity so you can give yourself that time. You need to decide. However, in this video, I hope that you get some value from the insights that I'm about to share. So if you like Bitcoin, give this a like, give it a comment, hit the notification bell. I'm also going to go into the macro as always to begin with, because I've got some very interesting charts that come from Fundstrat, Tom Lee, and then I'm going to go into some of the major pathways that this asset could take over the next few months to the end of this year, and then also what my strategy is at the end of this video. So let's get straight into it. The more time you spend in the market, the more time you realize that the mainstream media can proliferate noise rather than provide signal to what's going to happen next. You start to gather your information from small Discord channels, from X accounts, from faceless, nameless individuals who've managed to show real signal in the short term and actually predict what's going to happen. A combination of these accounts with the institutional analysts that you can trust because they provide real useful data can really help you understand potential directions the markets can go in. So this by Ancient Warrior, who thinks that we will rip into the 2nd of June and then a small drop before we fly into June the 20th. This is a signal to what could happen in the short term. Could it be completely accurate? Most likely not, but it could signal a general direction in the short term. And then I look at the institutional analyst, Tom Lee, who's managed to, in the past, especially during COVID, make very accurate predictions and show very simplified versions of charts that can be quite complicated. Tom Lee from Fundstrat believes that we're in better shape today than we were in February, where companies are showing their ability to be battle tested, especially after COVID, where they have managed to show they can endure the supply chain crisis that came from COVID. They've managed to endure the inflation surge of 2022. They've managed to endure the fastest rate hike in 2022 as well. And then the tariff being the latest gauntlet that the markets have managed to show real resilience. You can see these very clear signals that these three massive V-shaped recoveries have led to the most hated rallies. You can see that we're about to enter into the third most hated rally, where you have these V-shaped recoveries where everything's about to end, everything's going to zero, there's a Great Depression, there's a financial crisis, and then what happens is the market absorbs all of that news, all of that liquidity is then pumped back into the market, and it leads to these massive V-shaped recoveries. So we've got currently this most hated rally where you can see again the headlines that perpetuate around this time. 2/3 of fund managers say stocks are still in a bear market. That was 2019, and then we ended up massively outperforming. We could see a new low relative to the April low, says Fairlead's Katie Stockton. Every single time we've had these V-shaped recoveries, we have these massively bullish years that follow. The 12 months that follow these lows of more than 20% of a correction, you get these extremely exponential moves for the rest of the year. The pathway for Bitcoin is always going to be uncertain. And as you go through the year, it's going to go through real corrections as market makers hunt for liquidity and leverage as it builds up, as excitement builds up. But what you realize in these corrections is The bottom for new people in the market is this top picture. But the bottom for people who are experienced and see these are just discounts, it feels like you're in the casino and you're about to get 21. A small account on X showed a blueprint of what could happen. And I'd like to pull it out and just try and be a little bit different in terms of how I analyze this and attribute where he has accuracy and where potentially he is inaccurate. But it gives you a guideline of what could happen going into the rest of this year. So I'm going to go through his step-by-step process of what he thinks is going to happen. He actually managed to predict beforehand that Bitcoin would be trading around 110,000 in June, but actually we're already there in May. First part of the story is Tony suggests that Bitcoin is going to reach 100 to 110,000 by June, July. It's currently there. But more to this story can come from Colin with Crypto, who shows this M2 money supply chart. Now, what it shows is that M2 money supply leads Bitcoin by about 10 to 12 weeks, 81 days. Now, you can see where that M2 money supply is going. Bitcoin follows that trajectory. But also another nuance to this is that this isn't always the case. And if you go back to the past in 2021, Bitcoin started to top out and actually start to mean revert down, whereas money supply continued up. Now, what I believe is happening in that moment is that as FOMO starts to hit the market, excitement starts to hit the market, emotions start to play into decisions that people make, but the M2 money supply continues to go up. So that's why I think that later on in the cycle, these charts start to diverge. More to this story comes from this 106,000 supply. And once that heavy supply of Bitcoin is exchanged and new buyers take this supply, that's when we start to skyrocket. You can see that that was the previous all-time high. You can see the MACD crossover. And when that MACD crosses over, you start to have multiple weeks of this acceleration higher. We have the golden cross, which is all of these exponential moving averages converging. And this is, again, extremely rare. When this happens on the daily, you have these exponential moves higher. So you can start to see where this is going and that it'll probably last multiple months from this point forward with really severe corrections on the way up. Okay, point number 2, massive market rally into the summer. I can see how he draws this conclusion when you think about the purchasing manufacturing index. This is showing the increase in the economy. So when this is starting to tick up, which it is starting to do at 48, you start to enter into the expansionary economy. Under 50, you're constricted. But this also draws parallel to the Bitcoin Relative Strength Index, which is also showing that there's still a lot of room left for Bitcoin to climb, especially as we enter into the summer months. Number 3, the Fed rate cut that will most likely happen in June or July. Supreme Court gives Trump unprecedented power to fire regulators except Federal Reserve Chair Jerome Powell. However, this extremely new document that has just been passed by the Supreme Court grants the executive branch of the government more power to remove these independent bodies. With the pressure mounting on Fed Chair Powell to start to loosen his monetary policy and reduce rates, you can start to see how he's going to start to shift potentially towards more rate cuts. 4, your US and China trade deal. We have that pause that's just been recently announced. And I think that that is because the China economy is really signaling distress. Their biggest exporter is the US. They make up so much of their GDP by exporting to the consumer base of the US, and therefore they really rely on this American market. And so they can't drag these trade talks out for too long. They need to have a deal. Number 5 is the top in summer, and I can see how conclusions like this can be drawn. When you think about this heat map, it shows the blue is where accumulation is happening. You can see all of the blue at every cohort of buyer from the under 1 Bitcoin to over 100,000 Bitcoin. Every single one of those is blue, which means that there's a lot of FOMO coming into the market, and every sector of the economy is starting to invest in this asset. This also matches with the bearish divergence, which usually plays out on the weekly chart. You can see that the higher high in the price of Bitcoin, as it goes up to about 150 to 160,000, is also met with a lower high on the RSI. And that divergence usually leads to the price topping out and coming down, just in line with potentially the summer months. The Black Swan event in August and September, I don't believe that there's always going to be a Black Swan. We had the yen carry trade last year. But what I do notice is the low trading volumes in the summer months. People aren't at their trading desk. People are taking time off. People are on holidays. And that simple nature of people not being in the market can lead to a lot of manipulation, can lead to low liquidity, which means that anything can move the markets by multiple percentage points very much on any news headline that happens. With this parabolic bull run, I think that Tony is signaling that there could be this extreme mean reversion where you have this recession. Now, again, I don't believe that that's the case, but you can see how certain signals point towards a crisis. The Japanese 30-year yield is exploding, which means that across the world, all of the bonds within the countries of these powerful economic zones, no one wants to buy this fiat debt. No one wants the bonds of that country. And so the yields that incentivize people to invest in that country are soaring to the sky. And the higher they go, the more of a debt spiral we start to have with these major economic zones. It also lines up perfectly with this Euro versus Bitcoin chart, where the Central Bank of Europe talk about how Bitcoin has no value, but when you compare the Euro to Bitcoin and you pair them together, you can see how the Euro is getting weaker and weaker every year. The final part of this is all of these top signals, which aren't flashing at the moment, but as we move into this heightened period with extreme noise and extreme euphoria and extreme excitement and thrill, these top signals will start to flash and you'll start to see extreme froth build into the market. And then you have this final point where he talks about 30 to 50% collapse of the stock market. Again, I don't buy this. I think that there will be a correction at any point where you have a long run. You'll usually have this quantitative tightening cycle where money starts to come out of the market. The M2 money supply starts to come out of the market. And it's just a simple nature of liquidity. Assets go up when there's more liquidity in the market and money's easier to borrow, it's easier to access. And then when money's removed from the market, assets come down. So I don't believe in this doom and gloom, alarmist view of the markets tanking 30 to 50%. That's unlikely to happen, but there will be a correction after these parabolic moves, which I believe the S&P 500 will have by the end of the year. It'll be over 6,000. How could all of this be relevant? Well, I wanted to finish off with a few really important insights. When you think about the holders of Bitcoin, you've got BlackRock currently taking over Binance to become the second largest holder of Bitcoin. When Wall Street, who BlackRock represent, have a controlling interest in the price, they want it to go higher, it means that there's less manipulation that comes from these offshore exchanges like Binance, who can use market makers to bring down the price, and they always chase liquidations. And if you see this chart, you can see nearly 4 billion worth of liquidations will happen if the price of Bitcoin comes down to 98,000, and only 1.2 billion will happen if the price goes above 115,000. So the market makers are always trying to manipulate the price. But if Binance can't control as much as BlackRock, who represent Wall Street, you'll start to see the future price of Bitcoin is more determined by these institutional players rather than the offshore, unregulated market makers like Binance. The final point by Tony is the new bull run will start by the end of 2026, start of 2027. And it just references this extremely important chart, the Wall Street cheat sheet, which is all of these different emotions that you go through. You go through the hope, you go through the optimism, the belief, the thrill, the euphoria, and that euphoria, that is where everything comes crashing down, where there is mean reversion in the market, where people do take off some of the profits that they've managed to make. And then that does lead to a cascading effect where people start to realize there's no more buyers left and things top and flatten and then come down. The MVRV score is a really good signal that I like to use to understand how overheated the market is. And you can see it's an aggregate of the coins being exchanged across all buyers in the market. And at 111,000, that aggregate MVRV score is still quite low compared to prior cycles where it usually goes over 7 or gets to 7. We're not even near 5 at this point. So there's still room for this to run, but it's starting to become important to become more cautious of the price action going forward. The thing I'm going to finish off with is the difference that this cycle could show in terms of its direction. The change in hands from individuals to institutions has been massive. Treasuries, sovereign wealth funds, corporate bank balances starting to custody Bitcoin for its clients. The change in the type of investor is going to lead to a change in the structure of the way that this asset moves on these volatile, explosive moves up, or also on the way down. So I hope that you got some value from this video and understand that there is an important time frame to understand when you decide what you want to do. Do you have a position you want to hold for the long term where it will appreciate because of the scarcity of the asset? Or are you going to have some that you hold and some that you try and liquidate so that you're able to have liquidity to buy more if there is that mean reversion that will inevitably happen? It won't go up forever, but it will also be extremely hard to time the exact top. But it's always good to make sure that you are taking out small percentages as we start to ladder up because it moves so fast. So I hope you got some value from this video. See you in the next one. Thank you very much.